welcome back everyone. Michael here with Offshore Citizen. Today I'm going to try and answer for you a question that puzzled me. I didn't understand it coming from Canada, and that is, what is paid up share capital? All right, so we're on a marathon of videos here today, trying to blast through a bunch of them, prepare a bunch of content for you guys. And what we're going to talk about today is this thing that sometimes, maybe if you go to form a company, you're going to see a bit of a thing that says, listen, what is the, oh, it looks like my food is here. This is amazing. I'm super excited. Anyway, what we're gonna, so there'll be this thing called paid up share capital. In other words, what you see is you'll see, okay, here's the cost of the company, here's this stuff, and then there's also this paid up share capital. And you're like, what the hell is this paid up share capital thing? And I didn't get it. Honestly, I think it's a totally antiquated, complete nonsense thing. I was at a party the other night and I was talking to a guy in politics in Bulgaria, and one of the things I was telling him was, get rid of this trash. It's totally a waste. But if you're not from a part of the world where they have paid up shared capital, they have it in places like Bulgaria, Estonia. It seems to be popular in Eastern Europe. Poland, I believe, has it, etc., etc. It's just strange. So here's how it works. You form a company and you're expected to put a certain amount of money into the company. All right, now you can use this money, all right, but it's almost like an initial investment. So you're saying, and it'll be recorded. It'll be like, in Bulgaria here, this is what the process is, okay? So first I go and I, get all the documents, etc., ready to open the company, okay? Then what I have to do is I have to go and I have to open a share capital account, okay? So I have to go to a bank. I can't use this account. It's not useful to me, which is why it's a bunch of nonsense, right? But okay, great, I get this. I open this share capital account, I deposit. There's a minimum of 2 levs, which is like €1, okay? A minimum €1. Maybe some people put 20 euros, maybe they put 100 euros. Who cares? It's irrelevant, right? So you put it in there, although to be fair, some people actually will look at this paid up share capital, and I've heard of people getting denied contracts because your paid up share capital is too low, which is ridiculous because it means nothing. Like, you could have a 2-lev share capital account for a company that makes, $100 million a year, or you could have, $500,000 share capital account, would be levs, of course, so whatever the equivalent is, and have a company that makes no money at all. So it's totally ridiculous, but that's what they have. So anyway, you do that, then they will form the company for you, okay? Then you go back to the bank, they close your share capital account, and they open an actual operating account, and they transfer the money from the share capital account into your operating account, and then you can go and use that. So paid up share capital is basically a fancy term for the amount that you invest in, okay? And what you'll sometimes have is you'll say, okay, we have share capital, but we don't have to pay it all in at first. Sometimes you don't have to pay any of it in. Sometimes you have to pay, a certain portion in. Sometimes they have a minimum, which is, 2,000 euros or something like that, depending on where you are in the world. Okay, so anyway, that's just to clarify for you. If you see a price list, and if you're working with us and we're helping to form a company for you, and you get to some point where you say, hang on, I'm going through and all of a sudden this price, I'm seeing this extra X euros for this company, and that's paid up share capital. Is that an expense? What is that? The answer is, that is money that you're paying into the company that you're kind of putting there initially, and it is your money, so you don't actually lose it. It's not actually an expense, but it's money that you have to make available. There's something similar if you go through the residency program in Slovakia, right, where you end up having to invest a bunch of money into setting up this company and putting money on deposit, and then you can take it out after a period of time, but it's part of the process. So anyway, that's the answer to that question. I hope it helps you. I hope it clarifies this crazy nonsense, which is share capital. They don't have it in Canada, they don't have it in the US, they don't have it in the UK, they don't have it in Hong Kong, they don't have it in Singapore, Malaysia, etc. It should be thrown away. But in some places they still have it. Screw those guys, whatever. You got to follow their rules. And so anyway, if you like this video is helpful, please let me know. If you have questions that you have that you'd like to have answered, please let me know that by putting it into the comments. It's really helpful if you support our videos, if you share it with a friend, if you share our channel with a friend, that's awesome. Like the button, subscribe. Getting more engagement helps us with our YouTube algorithm. If you want to find out more about us, first of all, we've got lots of videos out there for you, so you can go through and check them. Visit our websites, www.offshorecitizen.net and www.offshorecapitalist.com. If you want to book some sort of a consultation or anything, you can contact us there. And you're free to book a consultation on www.clarity.fm/Michael Rosmer. You can see we got lots of, actually, all 5-star reviews. Very proud of that. Hopefully, that track record doesn't break, but in the meantime, people seem to like the consultations. So reach out to us, and I'm going to see you guys in the next video.